What is going on, investors? Hopefully, you guys have a great day out there. Going to talk about Walmart today. One of the world's largest retailers reported their year-end results. Ticker symbol WMT. We see here, look, Walmart's on sale today. Okay, down about 5% during the regular session. We're recording this during it, so it could bounce around a little bit. Now, year to date, this stock is really just flat. It's up about 1% for the year. We've got a $412 billion market cap. Now, one thing they did when they announced their earnings is they raised their dividend by a penny from 54 cents up to 55 cents. So you're going to get a penny more for your Walmart stock in terms of dividends. Now, the Q4 results we're kind of mixed, okay, but I think what's dragging the stock down, obviously we have kind of the entire stock market's kind of dragging today. We see here on all the stocks that I watch, there's very few of them that are green, and Walmart is one of them that is in the red. Now, pre-market, we were down 5%, so it is accelerating. When we jump over to the stock chart, we'll see, is this a buy the dip opportunity on Walmart? Okay, if you own shares like I do, and you want to add to them, well, this could be an opportunity. We'll talk about some levels here. Now, they gave some soft guidance that definitely is hurting the stock as well, but segment revenue is actually pretty good. We see Walmart US was nearly at $100 billion. They were expecting about 98. International came in at about $35 billion. They were expecting about 34, and Sam's Club came in at 16 and a half. They were expecting 16 and a third. So all things considered, it was a really good quarter. I think investors were looking for more. The last thing is that they showed that their US e-commerce sales were up 69%. I looked back through some of the press releases. They were growing at like 80 and 90%, okay, during the kind of the height of COVID-19 shutdowns and things like that. So we've seen a little bit of tightening in terms of e-commerce. Obviously, you kind of get in the law of big numbers and things like that. Law of large growth rates, maybe another way to say it. And so Walmart is kind of coming up into some tough comps when it comes to that. Now, we've got the numbers here. We're going to go through the revenues, the profits, the cash flows, take a look at the balance sheet. It's all looking pretty darn good, but we want to take a look at it. So we've got 3 months ended here, and we've got a fiscal year ended here. They actually ended the fiscal year 2021. So whether or not that makes sense to you since 2021 just started. So we've got net sales here up 7.4% in the quarter from 140 up to 150, and these are in millions, so that's 150 billion, basically 151 billion dollars. Membership, that's like Sam's Club, things like that, went up about 2.9%. That could include Walmart Plus as well, their little subscription program they've got there. Now, for the full year, we see that net sales went up about 6.8%. So solid sales growth. I think everybody would be expecting that, from Walmart, given the situation, a lot of shutdowns. Walmart obviously allowed to stay open. Now, cost of sales. This is a mega low margin business. Take a look. We spent $115 in the quarter to make $150 on the net sales side. Then they have operating expenses coming in at $31 billion. That gives us an operating income here for the quarter at $5.48 billion. Okay, this was off $152 billion. So you got to be comfortable with these low and slim margins with Walmart. That's part of their charm, is they offer low prices and they don't make a lot of profit when they sell something. We see here it's up about 3% from the previous quarter. Okay, so previous year, we had a 3.1% growth rate year over year on a quarterly basis. Now, it actually paints a much better picture for the fiscal year. Take a look. Our operating income rose 9.6%. That's really solid. You went from $20 billion up to $22 billion. When you grew your top line sales by, I want to say only 6.7%, and you grew your operating income by 9.6%, if Walmart's able to do that again and again, that is pretty solid. Now, they did some nice things here on the balance sheet side. We'll get to the balance sheet. We'll see more evidence of this. But on the operation side, you see debt went down 23.7% from 569 to 434. You see it's down 12% for the year. And obviously, you're going to pay, when you have less debt, you're going to pay less interest. So they paid 26% less interest in the quarter, 36% less during the fiscal year. That is solid. Now, their net income got blown up. You see here, we come down here to net income, and they lost $2.01 billion, and you lost 74 cents in the period when the previous quarter we made $1.46. So it got blown up because they had this big, like kind of a divestiture, I think, that they had to recognize here on the operations side at $5.5 billion. That basically blew up their net income. If you strip this out, what I would do is personally just come up here and look at operating income. Gives you a good window into how things were operating at Walmart. And by all accounts, everything looks just fine to me. Now, from a balance sheet perspective, everything looking pretty strong here as well. So you've got, here's our January 31st, 2020. Here's January 31st, 2021. Got solid growth up here on the cash flow, on the cash side, up to $17 billion. You got some receivables and things like that. Look at this. We grew our total current assets from 61 up to 90 billion. So that is absolutely fantastic. Now, long-term debt actually ticked down a little bit, went from 43 down to about 41. And also on the long-term debt due within 1 year, you see that is being paid down too. So they're paying this down and they're doing a nice job, in my opinion, of that. Now, from a cash flow perspective, this is where you're going to get a really good idea on how well Walmart did during the year. And spoiler alert, it was fantastic. Now, they added back in this net unrealized and realized gain. So that's kind of something we saw on the statement of operations there. And you get to add back in this big depreciation and amortization. And you see here for the year, $36 billion worth of cash flow versus the previous year we were at 25. So it's just a phenomenal year in terms of cash flow. Now, investing activities were basically flat. So they're investing in their properties, but not at a quicker pace, not much quicker pace than the previous year. And here we see the dividends paid. So that'll go up slightly over the next year when they pay a penny extra. They've got purchase of company stock. So they did a little bit of buyback, but not a whole lot. And you've got the repayments of long-term debt here, 1.9 down to about actually up to $5.4 billion in terms of repayment. So they're accelerating payments on that debt. They are doing a small buyback that reduced a little bit. It looks like in lieu of maybe rebuying the stock, they kind of paid down more of this debt, and the dividends obviously is there with Walmart. Now, the question you're probably wondering is, look, the stock is down 5% today, and you don't get a lot of one-day moves in Walmart where the stock goes down 5%. In fact, when you look at this stock chart, it goes back into last year. You don't see a lot of price gaps, okay? The stock tends to move pretty steadily, and you don't see a lot of big price gaps like we've seen here. And it's really, the stock is actually gapped into a zone where if you want to buy this thing, I don't got any problem with that. Now, the lower end of the zone is sitting right about $130 per share. We're sitting right at about $138, so it's about $8 lower. That's a pretty considerable move. You'd have to have the momentum in Walmart continue to the downside. Now, we were in a pretty solid uptrend here from about 7.7 of last year up until about December, the 1st of December. We were in a solid uptrend. It broke down, and now it's breaking down further. So you could say in the intermediate, kind of the very shorter term, the trend on this stock is actually down, but I would anticipate this stock to start consolidating sideways at some point. That tends to what happens with Walmart. It kind of goes up, it consolidates sideways, and then it resumes kind of an uptrend. So any consolidation sideways between 130 and really come up here to 138 where the price is today. Any consolidation inside here, I think, is not a bad place to buy this stock. Now, will I buy some shares? Certainly. I'm going to monitor it over the next couple days. I think we've got some market volatility that we're dealing with right now. When you come over here and take a look at what's happening, I mean, everything's selling off today. People are just kind of in a selling mood here in the stock market. And so I'm going to just kind of monitor that. Walmart's going to be on my list of stocks that I'll probably add a little bit to. Will I be really aggressive? Let's say I had, $5,000 that I wanted to invest in stocks that had a pullback. How much would I put in Walmart? Not a lot, honestly. Okay, it's dividend, it's safety, it's a good stock to have in your portfolio. Is it going to rip roar to the upside when things start turning around in the market? Probably not, but it is a very safe investment, and I do like it for the long term, and you're getting a great exposure to internet retail and obviously in-person retail as well here in the United States and around the world. So that was Walmart. Hopefully you guys enjoyed this one. We'll be back. Got a lot of fun videos actually planned for this week and this weekend. So stay tuned to the channel. Thanks for tuning in. Good luck with your investments.